far too many potential problems in the system that could trigger that all at once moment where you see gold really, really take off. But I would simply take a step back and say, what are the most powerful people in the world doing? And those are the central banks. They haven't stopped buying gold. In fact, they've doubled down on it. So 2025, I think, is going to be an interesting year. I think it will, maybe you could classify it as simple as it's inflate or die. I think that in terms of gold, it has nowhere to go but up because I think paper money has nowhere to go but down. I do believe that. I think that inflation is here to stay. And I think that's something that I would be focusing on very, very closely as how it affects the ultimate status of the markets, gold included. Look, let's just talk about the debt for a minute. Our debt is growing at a rate that is unsustainable. It's at $36 trillion. That doesn't take into account Medicare, Medicaid, Social Security, government, military pensions, which exceed $175 trillion. And let's baseline it and remember that a trillion seconds ago was 31,688 years ago. And the debt right now, you got Doge and Elon and Vivek are going to come and chop everything, but the debt is the overwhelming majority of it is in three areas. The first is non-discretionary social benefits like Social Security and Medicaid. No one's going to touch that. They already said they wouldn't. The second is defense spending. They won't touch that. And the third is interest on the national debt. They can't touch that. So this is I think we're going to see more spending and not less. And despite the need to combat this inflation, what is the Fed doing? Well, they're lowering rates instead of raising them. So they're not really combating anything. They've already signaled the white flag to inflation. And policymakers are not reducing spending. The first 2 months, now granted, this is the economy Trump is going to inherit, but the first 2 months of the fiscal year, October, November for 2025, showed almost $1 trillion in debt. The worst 2 month start to the Treasury in the history of the country. It took till 2009 to spend that much in a year. We just did it in 2 months. And so I don't know. I just think that this is a situation where just in October, November alone, the tax revenue was, $500-600 billion, and they're spending $1.2 trillion. This is not sustainable. This game is just not sustainable. So in 2025, what I would look for, I guess, would be a country that, administration that wants to downsize the government, impose tariffs, and ultimately for lower interest rates and a weaker dollar. They can't stop spending money because if they do, this whole pyramid of debt that's been built up over many decades comes crashing down. And it makes it worse that President Trump, who I am thrilled won the election, is trying to use the dollar as a weapon of force to force other countries to use our currency rather than extending the olive branch. All of these things will accelerate inflation and ultimately the de-dollarization trend that is continuing. So I look for a year where, or at least 2025, I think will be marked by high inflation and the ramifications that is going to have not only on markets in general, but in particular the debt market, the bond market, and we can see how that's already playing out, where the Fed has lowered interest rates in 3 meetings by over 100 basis points on the short end of the curve, but the back end, the 10-year Treasury, has gone up by over 100 basis points, and that is a bad omen because that's where the entire economy runs off of the 10 years. So I guess I kind of all over the place here, but I would say 2025 brings a weaker dollar as the government monetizes its debt to address its debt to GDP of almost 130%. And I look at bond market yields on the 10-year Treasury to go higher, even as they're lowering the federal funds rate, which we've seen. And I look for inflation, and all of these things are going to have reverberations through the economy. I don't think people have factored in yet as they're still kind of buzzed from the Trump euphoria, and rightfully so. I mean, I'll just simply say we've lived through bizarro world for the last 4 years. We've lived through a whitewashing of our culture. So there's reason to be optimistic and euphoric, but it doesn't change the massive amount of indebtedness, the rising interest rates, the inflation, the commercial real estate, the banks, all of these things have yet to be resolved. And quite frankly, I'm not optimistic that we won't get through those without a considerable amount of pain. Well, I mean, look, the delinquency rate of office mortgages, commercial real estate has spiked to 11%. That's an all-time high. Um, and, even during the financial crisis in '08, commercial real estate delinquency rates were at 10.7%. It's an all-time high. And this is like almost a disaster level. It's exploded over the past 2 years. And the office sector keeps on getting worse. There's $2 billion in commercial real estate debt that is becoming that just became delinquent in December, and as much of which here in 2025, about half of it needs to be reset at higher rates. I look for the banks to run into problems. I don't think we're anywhere near out of the banking issues. The banks are undercapitalized, they're over leveraged, and the funding programs, largely the BTFP, which is now expired, the Bank Term Funding Program, and um, the programs that were put into place to bail out these very overextended, undercapitalized banks, to me it's ominous. It's as if they could very quickly pull the plug on the system very, very quickly early into his administration, largely due to the banking problems. We had the first bank bail-in this country has seen this October, just a few months ago in Lindsay, Oklahoma, and it got virtually no press. I screamed about it for as long as I could. I think that to me is where I would focus primarily on my concern level, the banks. And we are not out of this yet, not even by a long shot. The banks, I think, are a ticking time bomb. And everything that is happening right now, in particular, rising 10-year yields, signals that this is the worst is yet to come, I guess I could say. Yeah, I think it's a bunch of nonsense. And so, they're so they don't make another 25 or 50 or 75 basis point cut. And really they shouldn't. Rates should go higher. The problem with rates going higher is that here again, this is when you run into bank problems. The banks are not able, the whole economy is not able to continue to um, service their debt in this rising interest rate environment. So if they don't lower rates, yeah, in theory, that's what they're saying. You have competition for fixed income like treasuries, which are paying a higher yield than as rates go higher than gold, which pays no yield at all. And so yeah, they would move inverse of each other. But no, I don't see that really as being an issue. The central banks are accumulating it. The problems in the economy are getting worse. And if they don't lower rates, and in fact, if they actually try to raise rates, and then we see rates in the 10-year even go higher, you're going to reach that point real quick where the economy runs into very, very, very big problems. And so this is the damned if they do, damned if they don't moment. The numbers that Goldman Sachs is talking about and they're flip-flopping and this and that to me mean nothing. And they've been wrong most of the time anyway. I mean, I guess it just depends on how the whole ecosystem plays out. But as long as central banks are around trying to support their currencies, you will see gold move higher and higher and higher in the face of um, money creation and inflation that is baked into the system. They talk about the Fed striving for 2% inflation. They don't get to 2%. I don't even think in the best of times we've been at 2% over the last 20 years. It's always higher than that. In particular, the metrics that they use to measure inflation are a bunch of nonsense. Also, the numbers are much higher. There, you can add an eight to the inflation number they give us because, they exclude so many of the things that are inflating: food, energy, and housing. And if things get too expensive, they change them, they replace them. John Williams of Shadow Stats will tell you inflation's 11%, not almost 3. But think about that. Even if it were 2%, take them at face value. Even if it were, that means in 10 years you lose 20% of your purchasing power. The currency is being insidiously inflated away over time. And so, yes, I mean, gold is the tortoise in the race. Look at what it's done since 2000. It's gone 9.9% higher per year on average for the last 25 years, quietly, as the dollar from which we measure our wealth is continually sliding in value. So, yeah, I mean, there may be moments. We live in a very fluid world where things keep changing day by day, where you could see major spikes or corrections. But in general, yes, I mean, gold just keeps marching forward in the face of a currency that keeps losing value, day by day, month by month, year by year, through the incessant money creation and inflation that is baked into the system. But in a situation that we have right now, yeah, you're talking far too many potential problems in the system that could trigger that all at once moment where you see gold really, really take off. But I would simply take a step back and say, what are the most powerful people in the world doing? And those are the central banks. They haven't stopped buying gold. In fact, they've doubled down on it. So I wouldn't look at the price. I wouldn't look at the metrics. The price, the inflation, all of these things are manipulated by the Bureau of Labor Statistics and a government who doesn't want people knowing the truth, doesn't want people abandoning the system, doesn't want people holding alternatives to the system. So, yeah, wouldn't surprise me to see a big spike, but I think more realistically, you will see a continued appreciation of gold in a very substantial manner. Look, my mentor told me if you make 7% per year, as Richard Russell, you're a rock star. And gold quietly has averaged 9.9% for almost 30 years without any notice. It's not sexy, it's not attractive, it's not flashy, but it continues to move forward. I don't see any reason that will change.